Are we making trading more difficult than it actually needs to be? In this video, that's what I want to talk about and what I want to try and clear up. You see, I get lots of emails from traders every single day asking myself and my brother to help them become profitable in their trading. And one of the things that we do ask a lot of traders that we don't know, so if they're not already from our community, is we ask them to send us across some charts just to give us an indication of the way that they're trading. And what comes across in a good number of them, now not all of them to be fair, but a good number of these people that are emailing us is the fact that they're really overusing indicators. And as a result of that, in the past couple of weeks, what I've been doing with our day trading community, and I'm not sure if they've noticed it, they probably have noticed it, is I've started to post a lot more charts of just plain price action. Because what I'm trying to get across to them and what I want to get across to you in this video right here is that often, less is more. So as traders and as human beings, in fact, it's quite normal to want reassurance about things. So if you're looking at a chart, you want something to confirm what you're looking at. And that's where you start introducing indicators. And to be fair, there's nothing wrong with that as long as you use it in the right context. So as long as you use it to confirm what it is that you already know and that you're already seeing. Where it becomes a problem is when you start to build entire systems around it. So you start to throw 5, 6, 7, 8 indicators on a chart, and then you start to make your trading decisions based off of what those indicators are saying, which ultimately they're lagging behind the price anyway, and you're making your decisions based on that rather than using that as some sort of a confirmation for you getting into the trade. And that's where the problem is. So what I'm going to do in this video right here is I'm going to jump over to the charts and I'm going to show you some price action setups that took place literally just this week to really prove to you that less sometimes can mean more. And as long as you you take the overall chart into account, you look at the context of the markets and you're really taking all of the information that you can and you build your trading decision based on that, then you're going to be a profitable trader. Okay, and I'm also going to show you that there's no right way to trade. So, the people that say, oh, I'm only a breakout trader, or I'm only a range trader, or, I'm only this or that. I really think that those people are limiting themselves because what they're doing is that they're probably seeing the setups, the other setups. So let's say, for example, they trade breakouts, but they can probably see the range trades. They're just not taking them because they've pigeonholed themselves into this thing calling themselves a breakout trader when that they don't have to be that. That could be one of the trades that they're stronger at. But if they're able to trade and make money from other setups, then why not? Because at the end of the day, one of the big problems that a lot of retail trade, well, actually any trader faces, is the fact that they sometimes or somehow feel that they always need to be in the market, and if they're not in a trade, then they'll invent a trade that doesn't exist. They'll start picking up their monitors and putting their monitors on its side and looking for things that really don't exist. Now, if you didn't pigeonhole yourself and say, I'm only one sort of trader, and instead said that I'm just a trader and I'm going to trade whatever it is that the market presents to me, then you're giving yourselves a lot more opportunities to be able to take advantage of. Okay, so let's go over to the charts now and let's talk about some of these setups. And let me show you a couple that have set up this week just to really sort of drill home the point that less sometimes is more. Okay? So let's start off by taking a look at a trade that I posted in the Facebook group earlier on this week, or my Facebook page and in the group. And that's this one on the Aussie CAD. And I want to start off by taking a look at the hourly chart just so you can see the setup that we're taking. Now, what we had identified is the fact that the price had been in an upwards trend. We've got this resistance level in here, which is a long-term resistance level, and it's clearly something that we don't want to trade into. And if the price actually gets there, then in fact we might decide to trade against it and take a trade in the opposite direction when it bounces from this level. So we've got that in our sights there. That's us taking the sort of like the whole market into account and looking at everything that the market is showing us. Then we identified that we've got this upwards sloping trend line. Now at the time, this price action here, this had not occurred. We'd just seen that this had come down, the market bounced up again, and then it was coming back towards that trend line. I don't know if you've seen my video, but if you haven't, go back and look over some of the YouTube videos where I talk about trading trend lines and things like that. And ultimately what I say is that, you only need 2 touch points to be able to identify something, and then you look at price action when it approaches for the 3rd touch point. There's a lot of people out there that say, oh no, it needs 3 or 4 or 5 touches in order for it to be a valid trend line. But the problem is that you're just kind of falling into that trap where you're looking for all of that additional confirmation again. And by the time you wait for that confirmation, you end up being the person that's getting into the market way, way, way too late, and all of the professionals have already made their money. So at this point here, we drew in this trend line and we thought, you know what, if the market comes back to this level, we're going to take a trade from that level. Then if we zoom into the 15-minute chart, we can see exactly where the market came back to that level. So over here, this is the trend line. This is going to be the 3rd touch point. You can see that the market is breaking down towards this level here. All right, it comes down to this area, which is the trend line. We've also got another support level just beneath it. All right, so we were expecting a bounce around here or around this level anyway. Now what happens? We get the price action at this level. So you can see that we've got some relatively big bodied red candles coming down to the level, then it gets smaller and smaller and smaller. And then eventually we get a very, very nice positive bullish engulfing candle over here. This candle obviously is a very, very bullish candle because at one point in time it was all the way down here. It was very negative, and the buyers came into the markets and pushed it all the way up to the top here. Okay, and when they pushed it up to the top, once that candle closed, that's your signal to get into the trade ultimately. You place your stop beneath the low there, and then you're targeting sort of these highs here. For where you want to take profit. So it's not like you're expecting the market to break out to any new highs or do anything spectacular. You can actually make sort of like nearly 3-4 times return on your money just from taking trades based on price action. Okay, so that was the one in the Aussie CAD. I played a game with our group this morning and I said, show me the setups that occurred yesterday. Okay, so in the Aussie Yen and the Euro Aussie, show me those trades and show me where you would have taken it. So at the moment, I'm waiting for everybody to post back their charts in the group and we'll see if they manage to get this. And we'll send this video out later so that they don't get a hint anyway. Okay, so anyway, the Aussie Yen. So the Aussie Yen, the first thing that I want you to take a look at before we look at the price action is always to get an idea as to what the chart is doing. What's the context of the chart? Okay, and as we can see here from the daily, the market is definitely very, very bullish. It's kind of stopped at this level, this resistance level over here. I'll zoom in here. And it pulled back from this resistance level here. But we are very, very bullish on this pair and we expect it to go way up. So with that in mind, we then jumped across to the 15-minute chart. And what we noticed was you have this sort of a consolidation zone here. So the market came down and made a low. It then came up and made a high, and then it started to move sideways. Now, there's a number of ways that you could have traded this, and I've already seen a few posts within the group. One of them was suggesting that you could have taken a trade. There was a trend line in here. They kind of cut through a few candles and could have taken a trade from there, which is possible. I personally, if I was going to be more aggressive, probably would have taken it on a break of this high here. We always like to... Let's get that in there. This high here. Whoa, why is it not working? Try again. 3rd attempt. There we go. This high over here, because I always like to see that a high is broken before I get into the market. I wouldn't have taken it from this level here because then this high is just way too close and you may as well wait for that break there. So you could have taken an entry from this area here around 85.65. But the one that we opted for, let's get rid of that resistance line there. The one that we opted for is this one over here. So the market broke out above this level here, closed above. It then went sideways. So let me zoom into this for you. You can see, so there are 2 ways that you can play breaks, right? You can either take the initial break right here. All right, it's a little bit more aggressive and you could be stopped out. Or you could wait for the market to kind of prove to you that it wants to go in that direction and wait for a little consolidation phase or a pullback after the break, which is what we prefer to do most of the time. And basically wait for this consolidation. Yes, you're getting in a little bit later, but you're getting a little bit of extra confirmation there as well. Getting on the break there, your stop can go beneath the lows like that, so you can have a closer stop. And as you can see, the market has literally keeps giving. Why does this? Hold on one second. Let's just get rid of that line there. The market has broken out from that level and kind of not looked back at all. Well, now it's looking back. And then finally, the final price action setup that I want to show you is this one here in the Euro Aussie. So the Euro Aussie, it broke through printed a structure level, and you can see it best here on the 4-hour charts. It printed a structure level back here in January. And the reason that we call this a structure level and what we're looking for is we're looking for a reaction to a level. So we wouldn't consider this necessarily a level of support around here. We want the market to come down and then react to a level, move away from a level, which is what happens here. So the market comes down to this level and then moves away from it. And then it comes down for it, plays with it, and eventually breaks it on about the 6th or 7th of February there. Okay, so the setup that we took was, again, let's go over to the 15-minute chart. Basically, well, there are two that you could have taken. The one that we took, all right, is once the market, we kind of like 1, 2, 3 reversals. So we got in a little bit later on this one, but the one that we took is this 1, 2, 3 reversals. And the market came up to this level here, came down, it reacted to the level. So it showed us that it sees the level there. It didn't, if it wanted to break above, that would have been the perfect moment to do that, right? If you think about the way that the markets work, if it's going to break to the upside, we should see a lot of momentum through this resistance level here. We didn't get that. So then we thought, okay, so that previous support level was now acting as resistance. The market pulls back. It then attempts to break through there again. But it doesn't print a high that's higher than this previous high. And then eventually it breaks beneath this level here. That's the signal to enter. You have your stop above the highs and you trade it down towards the low of the range. If you were awake or you live in Australia around 3:30 in the morning GMT, then the other option that you could have taken would have been to take a trade when it broke back beneath this level here. So the market breaks up above it, proves that it can't hold above it, and then breaks below, and then you could have taken yourself from that area there, stop above the highs. And again, you could have held it to the bottom of the range, in which case you would have got a ridiculous risk-reward trade, or you could have traded it down to the 100 moving average or something like that. Okay? So that wraps it up for this video. I hope you enjoyed it, and I hope it kind of really proves a couple of points there for you. I'm not expecting you to go away and completely change your trading philosophy at all. I think I'm just kind of trying to prove a point to all of you traders out there that are looking for that holy grail or that magical system. And I just want to show you that really there is no magical system. There's a number of ways that you can get into or out of the market. And as I said before, sometimes less truly is more, you know. If you try to throw more indicators onto your charts and things like that, you're going to find that you come unstuck because you're going to not, you'll be removing the responsibility from yourself, right? So you won't be looking at yourself and saying, you know, I need to read the markets. You'll be putting it all on a bunch of indicators and then wondering why it doesn't work out, okay? So I hope you enjoyed that. As I said, I hope it gives you some food for thought. A very, very quick message to those of you that are watching as this video is posted. If you're watching later, so basically after the 14th of February 2017, this message has nothing to do with you, so you can probably switch off now. But if you are watching this week, please remember that we've got a 25% discount on our money file, which is the service where my brother and I we write up all of the trades that we're looking at, the longer term trades that we're looking at for the week ahead, and we send it out in a report on a Sunday. And typically this is going to be good for those of you that you work full time, so you don't have enough time to analyze the markets, or maybe you're new to it and you just kind of want to look over someone's shoulder and make sure that you're making the right sorts of decisions. So as I said, what it ultimately is it's a report that we send out each and every Sunday. We detail every single one of the trades that we're looking to take. So we say, you know, the levels that we're looking to take them from, the entries where applicable. So sometimes the opportunity will be setting up as we're writing. We can say, so it's this level that we're looking to get in at. Other times the price won't be there yet, so we'll say we will get in if the price were to give us a 1, 2, 3 reversal, or if it were to close outside of this area here, we will then get into the trade. Things like that. But ultimately, it's my brother and I feel it's a fantastic service for all traders out there. You know, even if you don't necessarily use all of the ideas that we give you, and you just use it to give you a heads up on what the market's doing, then it's still a fantastic service. Okay, so if you're interested in it, I'm going to post a video beneath the video here. I'm going to post a link beneath the video here, so please click on that link, take a look for more information about it. And if you've got any questions, please feel free, either post it beneath the video or drop us an email. Either or, we'll be happy to answer it. Thank you very much for watching. I hope you got loads of value out of this video. I hope you got across what it is that I was really trying to put to you, and you're going to go away and do a lot of thinking about your trading. So thank you very much for watching. Have a fantastic weekend now.